US President Donald Trump's highly anticipated tariffs on dozens of economies went into effect on Wednesday, escalating the global trade war. These tariffs, which include a staggering 104% levy on Chinese goods, sent markets into another sharp decline as investors braced for further economic disruptions. Following the initial 10% tariffs introduced over the weekend, duties on imports from countries like the European Union and Japan increased once again at 12:01 a.m. on Wednesday. China, Washington's primary economic rival, has been hit hardest, with tariff on its products now reaching the significant 1.4%. Trump has stated that his administration is working on tailored deals with key allies like Japan and South Korea. However, despite this, Beijing remains steadfast, promising to continue its trade war to the end and imposing a retaliatory 34% tariff on US goods set to come into effect Thursday. The US president insists that his policies will help revitalize America's manufacturing sector by compelling companies to move production to the United States. Yet, many economists and business experts are skeptical about the pace of such a shift and warn of higher inflation as a result of the tariffs. Trump has also indicated that a major tariff on pharmaceuticals will be announced soon. Meanwhile, Canada has introduced its own tariffs on certain US auto imports, further intensifying the global trade friction. Markets have reacted sharply, with the stocks in Asia plunging, particularly in Hong Kong and Japan, while Taiwan's stocks saw a significant decline. The global currency market also faced turmoil, with the South Korean won hitting its lowest point against the dollar since 2009. China's offshore yuan also weakened as Beijing's central bank sought to manage the impact. Oil prices slumped as well, with West Texas Intermediate falling below $60, the lowest level since April 2021. Safe haven assets such as global benchmark bonds also saw sharp declines amid fears of economic instability. The European Union has called for de-escalation, with EU Chief Ursula von der Leyen urging China to avoid further escalation in the trade conflict. In response, China Premier Li Qiang expressed confidence in China's ability to weather the economic storm. Meanwhile, tensions within the US also rising, with key figures like Elon Musk publicly criticizing Trump's trade advisor Peter Navarro, signaling growing opposition to the trade policies within some US business circles. The outcome of this trade war remains uncertain, but analysts, including those at JP Morgan, now estimate a 60% chance of a global recession by the end of the year.